Good morning. It is an interesting morning on the stock market. We've got oil prices going up, and based on the pre-market numbers that I was looking at, stocks were going to open up a little lower. What's going on, stock market? We'll see where this is going to go, and especially for the week, what do we expect in the stock market? We have one inflation report coming up on Thursday that I'm going to keep my eye on. And it's a little bit of the calm before earnings really start toward the end of the month. I think we're going to have a pretty heavy earnings season. We have an election coming up in, call it a month. And so it's going to be an exciting 4 weeks of action. The stock market tends to dislike the month of October. October tends to be a bad month. Don't want to kind of totally buy into that, but I could tell you the data doesn't lie. It just doesn't like October. And part of it is like this year is a good example. You know, the market's been good. So investors, I was selling off some stocks over the past month. I wanted to create more cash. I'm glad I did so. And I think other investors do the same. So it's not, completely nuts that the market tends to sell off in October. It's actually something that happens. It's almost like seasonal, cyclical. So that is reality. So just to highlight a couple of things around the channel, obviously you're seeing me on the platform of choice. Most of you see me on YouTube, which is great. Thank you for all your support. I really appreciate that. And if you are a Discord user or would like to be a Discord user, we have a very active Discord server going on, and you are happy to join us there. Just be aware there's scammers on Discord. It's just a reality. Just be very careful. I will never reach out to you and request that we become friends directly. And usually scammers will copy a profile like mine and then reach out to you pretending they're me. And they try to warm up to you and eventually try to scam you. So be very careful. If you get a friend invite on Discord from me, it's not me. Study the name. You'll see, oh, they're trying to trick me. So be very careful with that. Report anything you see that is shady or scammer-like on the particular channel within the server that has the scam alerts. And we have, I'm now broadcasting on Twitch. So if you're watching me on Twitch, great to have you. I continue to grow. I'm an investor for a while, and but I'm a streamer for a little while. So I continue to grow and expand. And one of the more recent changes was I started to stream on Twitch. And I think it's a platform that was kind of one of the originals for streaming. So I wanted to stream there. I think there is a good audience of people that are interested in investing. So I wanted to put myself out there. The channels that, or I should say the social that I'm on, and I'm on Facebook, I'm on Threads, I'm also on X, but not a lot of action there if you want to follow me. Then I'm also on Reddit. If you want my Reddit name, just send me a Discord message or send me a comment on YouTube. I believe I put my Reddit handle on my YouTube channel. So if you want to watch it there. All right, enough of that. Let's move on to what we want to talk about, which is the stock market. So, all right, so let's see where the market is trading at the moment. It is 4 minutes after the stock market opened, and I thought the market was going to open in the red across the board, and it has. I just needed to refresh my screen. The Dow is down, S&P is down, Nasdaq's down, not too bad, and the Russell is up. But that Russell, I can't trust how it opens because oftentimes it'll open at one level and then change within the first hour. So we'll see where it's at later on today. The VIX is up. It's up considerably, about 9%. Take a little nervousness out there. I know that Apple, we should look at the Apple stock. It's the most valuable stock on the New York Stock Exchange. And let's take a look at that. I know there was news around that. I'd like to take a peek at it. There was news around Pfizer. I want to look at Pfizer because a big investor has entered the picture. It's an activist investor that wants to, I would say, influence how they're going to operate going forward. And the market, I think, likes it so far. The stock's up. So let's talk about that. There's a couple other stocks that I thought were interesting to look at. And let's look at some oil stocks because oil is rallying again. Hey, not bad. Not bad. Keep going, oil price. I say that because I own a big oil company and it's a big position in my portfolio. So if oil prices go up, I'm okay. It's one way, when we go to the pump, and I live in Southern California. In California, we pay, I don't know if it's the highest amount per gallon for gasoline. It's probably up there, I'm sure, because when I travel to like Texas and other states, it's like $2 per gallon less expensive, if not more, like $3 less expensive. And I think they collect a lot of taxes, and the mix of the gasoline is more expensive to refine and all that good stuff. But one of the things that, I've owned Chevron for a long time and I get a dividend from Chevron. It's a pretty sizable one. So when we fill up, it does kind of catch your attention when you put $150 into your gas tank. And I just think, well, my dividend's a lot higher than that. We fill up multiple times a quarter, obviously. And my dividend more than pays for all that gasoline and then some. So that's one way to fight inflation is buy dividend stocks and, hey, pay for whatever living expenses are out there like gasoline. So, all right. So that's kind of like the thread we're going to go. I would love to hear what companies you want to talk about. If you see a company, I got a tip, and I'm going to keep it as a little surprise from somebody on a comment on a video. And I looked at this stock and I'm like, holy smokes, why haven't I seen this stock before? It is going up so fast and it kind of makes sense. It's not all fluff. So we'll take a look. Let's see the comments here. We've got Shadow Guy. Good to see you. Thanks for joining. Thanks for all your support. So FLCH is up. Let's take a look at that. And I think that's an ETF for China. We'll take a look at that. Tomas, good to see you. It was a great session yesterday. We had a member video conference, and Tomas had a request to really dig into evaluation. And we went one step at a time. And I thought it was good. I got some good feedback. I really appreciate it. I am sorry that I didn't record it. I guess I was so focused on what you guys wanted to talk about on the call that I forgot to hit the record button. I promised to record the other calls. But let's do it again. In fact, I'm going to put together more of a workshop where we can have, more of the members actually showing their screen, and we kind of go through, and hopefully that helps people to learn and maybe just get really comfortable in looking at financials, grabbing data, analyzing a company, and going through and making decisions. So glad to do that. I thought the session yesterday was really good. I look forward to next Sunday. It's going to be a highlight to my weekend. Alta, very nice to see you. Do Me Trash, thanks for coming. You are a regular, and I appreciate that. And I appreciate you being on Discord as well. So EC, you want to talk about EC? I don't know that we've looked at EC. Good morning, Prad. Good to see you. And thanks for joining the live stream, talk about crypto. And I look forward to seeing your stream at 8 p.m. Eastern and see what's going on. Hopefully the market gives you volatility so you can make some money. Hey, Brad, good to see you. So gas is $2.69 a gallon in Georgia, where you live. Oh, good. I'm glad they suspended taxes. Good. Yeah. And, I've lived in California my whole life, so I don't know if for in general, I don't know any different. My cost of living is what it is. And but it is kind of interesting that it's gasoline's so much less expensive. And Brad, thanks for all the back and forth on your evaluation of REITs. I hope I provided some clarity, and let's keep it coming. Maybe that might be a good topic for the workshop where we can kind of dig into REITs and dig into companies that you value using different techniques, because um, the primary technique, looking at free cash flows and earnings per share, it's for most companies, but some companies like real estate investment trust, they're a different animal, and I treat them differently. I think it's uh, most investors view it the way that I do, which is don't use free cash flows because that could throw you off. But I'd love to get into it because you're really getting into the analysis, which is great. And I think you're going to learn a lot more. You're going to learn a lot more about the investments and the companies you're looking at. If you really dig in and really get into their financials, get into the specifics, put them into a model, rationalize the arithmetic, rationalize it so that you completely understand it. You understand that business. I think you'll make more sound investments when you do that. So great to collaborate with you. Thanks for bringing it. Manjeet, very nice to see you, and thanks for being a member. I think it's the first time I've seen you, and I think it's Bobby, if I remember correctly. It's great to have you. Thanks for joining the program, and please become active. I know you just became a member, but great to have you on the stream. Please attend the member conference call, the next one we're going to have on Sunday. I think I sent you the invite, and then the workshop that's going to come. Brian, thanks for joining. So you're looking at Repsol. Never heard of Repsol. Let's see if we can look at that. Omar, any tips for having a great portfolio, specifically those dividends? There's a lot of tips, but that's a big question. I would say that there's so much that I could say there, right? I could spend the next hour there. I would say that allocate time, every week, every month, continue to learn, and then grow a portfolio over time. I don't know how you can just jump in and kind of say, okay, this is my portfolio and I built it in a day or a week. I think it's good to take it. I dollar cost average into positions. I take it over time, and you end up with a portfolio that really aligns with how you want to invest and what you want out of your investments. Do you want income? Do you want appreciation, and so forth? So I know that you're very active on comments, so that's great. Keep watching and keep learning. And then Shadow Guy, we did check out EC a few days ago. Yeah, okay, let's look at EC again. So, and then Earthbound Misfit, good morning. Good to see you, man. Very good to see you. So thanks everyone for joining. Let's go through a couple of streams of thought here, and just get into it. Keep the comments coming. I'll come back to the comments at a good point. Okay, so what's going on with the stock market? So the market opened up a little lower. As mentioned earlier, October is one of those months that usually, stocks will sell off, and there's a lot of good reasons. There are some rational reasons why stocks would sell off in October of 2024. First one being is some stocks are really expensive, and investors are probably saying, hey, I could lock in a gain and have a good year. Totally makes sense. Or maybe they're like, man, I think this stock's overpriced. Maybe I can offload some shares, if not just get completely out of position. So a sell-off in October, not completely out of the question. I'm not asking for it. I'm not saying it's going to happen. I'm just saying if it happens, I'm not going to be surprised. It's just what happens in October. But what usually happens at the end of the year is Santa Claus. Santa Claus comes and we have a rally, and he comes with a big bag of toys and, makes our stocks go up. So that is also a cyclical, seasonal expectation, is you have a end of year rally where people have gotten rid of some of the stocks that they wanted to get rid of. They harvested some tax losses, if they have any, and then they start buying into stocks so that they're getting ready for the new year, which would be 2025. So Let's see where things evolve. One of the markets I keep an eye on is the bond market, and bond yields have been going up over the last couple of weeks. Now, bonds are really boring, but I love bonds because bonds make money while I sleep. I don't have to think about bonds a whole lot. They don't have as much risk as stocks. So I put a portion of my portfolio into bonds and it makes income. And you just set it and forget it. And especially when the market is selling off and it gets incredibly brutal out there and your stocks are going down in value and you're like, okay, I'm gonna tough this out. I'm gonna keep buying shares into companies I want. You have more conviction when you have a portfolio of bonds that's sitting there going, I know the rest of the stock market's just crashing and burning, but I'm actually going up in value and I'm giving you a yield. I know that the yield of 7% on a down market looks pretty damn good. So that's why I like bonds. And buying bonds when nobody wants them is the best time. So market's doing great. We're excited about the economic news. Economic news is good. Hey, man, things are great. Well, the yields are going up because the expectation that the Federal Reserve is going to lower rates, but not as quickly as maybe they need to. They're not pressed to do it. They're not being pressured into changing the interest rate market right now. So over the last 2 weeks, yields have gone up, which means my bonds are going to pay me more money, the ones that I buy. So I've been buying into an ETF. I'm pretty good. My bond portfolio consists of a bond ladder, and then I'm buying into an ETF. Just to give you a quick tour, I have the next 5 years. I have individual bonds covering, for the most part, the next 5 years. And I have my living expenses covered with my bonds. And they provide a nice yield. For example, the bonds that are going to mature next year, the total return will be about 9.3, which is very good. I bought them at the right time and they're going to redeem next year. So I'll get that cash flow. But now what I'm doing, because I want longer term bonds, I want exposure to longer term market. So I'm buying this ETF. It has a low expense ratio. It has a good mix of long-term bonds. And I think the long-term market is where interest rates are also rising and they're going to stay there. So I can earn about 5% on this ETF and I'm buying into it. I've got $6,000 into it. I'm probably going to buy another $1,000 today because yields are up. When yields are up, bond prices drop. So it's a better time to buy when the ETF price drops. Right now, I've lost $85 on my investment because the yields, as they go up, the value of this ETF goes down. Again, I'm buying when it goes down. At some point, when yields begin to go down, this is going to increase in value. So I'm buying into, let's call it a lowering market in this ETF, and I'm going to continue to accumulate there. And this will serve as a long-term bond mix in my fixed income. Now, when I put all my bonds together, they make up about 21, 22% of my portfolio. So most of my portfolio is in stocks. It's not in bonds. And when bonds were paying just about nothing, which was 4 years ago in 2020, I had zero bonds. They were uninvestable. I did not want bonds. No, thank you. I'd rather take a higher risk and make a higher return. But that's where I'm at now with bonds, and that's where yields are at. The Asian market, it looks like Japan had a decent day. And when we talk about Japan, they've already closed, right? They're ahead of us like 12 hours to me. And they had a decent day at 22%. Of course, everybody's watching China, but China's still taking some time off. Their market's going to open tomorrow, Tuesday. And again, China's like 12 hours ahead of me. So I could see the open late tonight in California and see where China's going to open. I'm sure a lot of eyeballs are going to be on that because China stocks have been just going up crazy. I'm going to show you one that's super crazy in a bit. So we have the Nikkei was up a little bit. The Hang Seng, I believe, is Hong Kong. It was up nicely. So Asia's out there. I think China's got a lot of room to go up. I'm not the only one saying that, and I'm really bullish on that. All right, let's take a look at sectors. Where are sectors at today? Who is on top? Who is making it happen? It looks like, I don't know if this is right, because this looks pretty much like what we saw for Friday's close. I'm not sure I'm going to believe this just yet, because this looks pretty much like, no, there we go. Here we go. There we go. I needed to hit refresh. So energy's on top. That's right, energy, because oil prices are up. And then healthcare is holding its value. That makes sense. Healthcare tends to do okay, especially when the rest of the market's selling off. Utilities are down. Consumer discretionary is down. Consumer discretionary was up a lot on Friday, but today it's selling off. Interesting. And I think Amazon's a big component of that, and Amazon's selling off today. If Amazon sells off, I buy. I'm just buying Amazon, period. I want to own that business. I want to be a part owner in that business. So we'll see how that's trading today, and I'm probably going to buy shares. Real estate's down. We've been talking about real estate. Real estate's kind of a riddle that I can't solve. The interest rates, for the most part, are going down. I know that the last 2 weeks, interest rates have risen. Okay. That might be the factor that's affecting real estate. But I think REITs have kind of gone down in value quite a bit. And I'm not figuring that one out. The one thing I would caution everybody is, you see this 5-year change column, right? I always keep an eye on that, because what is the potential of this sector? And real estate is not a high performing sector over time. I depend on real estate for REITs. It's part of my income portfolio. I own one REIT, CTRE, and then I'm careful not to buy too much more. So just keep an eye on and set your expectations on, hey, if I invest in industrials over 5 years, it's return 140%. That is a thumbs up. So if that's selling off, I'm very interested, and I own multiple industrials. But with real estate, I'm realistic about what kind of appreciation am I going to expect there. I'm not expecting a whole lot, so I'm careful not to overinvest in real estate, but it has been selling off. Heck, man, probably the dividends are getting that much nicer. We looked at Vici. I know that Brad looked at Vici. I've always liked Vici. Let's take a look at Vici, because I think Vici's business is solid. I've owned Vici in the past. I don't regret owning Vici in the past. I like the stock. I like the company. I like their focus on, hospitality and resort-like properties, pretty much like the Strip in Las Vegas, that type of property. And I think with the economy doing well, they're probably going to do quite well. So we'll take a look at that one. And so we've got consumer services is down. So most sectors are down. The biggest one being utilities. And we got maybe utilities, because energy prices are going up. So they're going to have to pay more money to create power. And then we got consumer staples, industrials, financials, materials. And it's good to see the materials are kind of holding their own. I think materials have seen it's kind of a rally that's been incognito or avoiding the radar. I've seen that some material companies have been appreciating over the last 30 days. And that's kind of a signal that investors are thinking, okay, with a better economy, those commodities are going to start rising in price. And those companies that either mine that commodity or find the commodity, extract the commodity, are going to be doing better, because the price they sell that commodity at is going to be much higher. So that looks good. And then technology is right there, nice and flat, looks good. Technology is doing okay. So interesting. All right. So I wanted to look at oil just real quick. Let's see if I hit refresh, is it going to keep me here? Yeah, good. So the oil complex is doing better, and I'll look at a couple specifics and kind of see where they're doing. But, in the 1 day, the oil and gas exploration production, these are probably the majors. It's doing well today. It's green across the board. And for the last month, they've been doing well. Uranium is doing the best. I guess the big interest in nuclear power is probably driving up those prices as well. Thermal coal, look at that. Wow, 14.65. Interesting. So now that oil prices have risen, and I think as recent as I think yesterday, there was a report that one of the members kind of brought up that somebody's expecting that oil prices may begin to settle down and go down. Well, very quickly, boom, oil prices are up 2%. So they keep going up. And I think that they could continue to go up, maybe touch 80, maybe eclipse 80 by a little bit, and maybe just trade between 70 and 80 for a while. We'll see what happens, but I totally see oil prices staying where they're at, maybe appreciating a little bit or going up a little bit. But that's what's going on with oil companies. It's a pretty good trade, and we started talking about it, a month ago. So it was when the buying was really good. I think we're still in a rally in oil. It'll probably continue to work well, and these companies tend to pay dividends. So I'm glad that I own Chevron. I'm thinking maybe I sell some of my Chevron and buy one of these smaller companies. We'll see. All right, so we covered that. Let's get into Jose. Very good to have you. What do you think about Vertra Inc., BSTI? All right, so I've got a lot of stocks to cover. If I can get to that one, I will. And let me take a look. All right, so let's start with EC. So Ecopetrol. So this is the company down in Colombia. And the piece that was kind of confusing on this one was the exchange rate. That's what was hard to get my head around. What's it doing today? It's up 2%. It's pretty much even over the last 30. So it really went down and it really rallied. This dividend is what concerns me, is when you have a dividend rate this high, it's too good. It's almost too good to be true. It's almost like a sugar high. Like, wait, are they going to sustain 34.77? So let's take a look at the dividend history. So this is the type of company that the dividend has really fluctuated based on profitability. And the most recent one is not the highest dividend they've paid. And do they pay it every quarter? It looks like they pay it every quarter. Okay. The payout ratio, I've never seen a number this high. Why is the payout ratio so high? So 30. So this is like 32 times their actual profit, which is unusual. So the dividend goes up and down. Now, if oil prices are down, I'm expecting the dividend is going to drop substantially. And you can see that, like, in 2021, it dropped substantially, right? From 89 cents down to 8 cents. And then in 2019, it dropped to 53 cents. So this company pays out what they could afford. And I imagine, based on commodity prices, that they're not going to be able to keep this dividend rate, which is really high. So if it dropped to like 10%, it would still be a really attractive dividend. I think the question on this one is, so it's a reasonable cap at 18.6 billion. Let's take a look at, like, let me convert this to English. So this is an energy company. And the whole Ecopetrol, I want to understand, are they a pure play like solar, or are they also into oil? So they're in Colombia. So do exploration, transport, sales, marketing. So they do refining. So it's maybe they just like calling themselves an eco company, but they still do it the old-fashioned way. So they do offshore. It's expensive. So they do business in Brazil and in Mexico and in the US. So that's where their assets are at. That kind of makes sense because I've never known of Colombia being an oil rich country where under their geography are oil reserves. But what they've decided to do is do offshore, which kind of changes the game. And I think there's a certain number of miles that you can drill offshore and not be in another country's um, territory. So maybe that's what they're doing. I'd have to look into that, but that's what I'm expecting is happening there. So we are going to look at, let's see if they have a nice presentation that we can look at together here. And hopefully it's in English. So it's going to be in Espanol. So, oh no, it's in English. Cool. All right, great. Consistent. So upstream is where they find the oil, they're extracting it. Midstream is they're refining it. Downstream is the gasoline station. And these charts look good. First half of 2024. And this is production, right? Yeah, so this is production. I don't think it is a revenue chart. It's number of barrels that are being extracted, and then they're refining those barrels, and then they're selling the end product, the petroleum product. So here's revenue, EBITDA, net income. So revenue is in gray, and we can see that revenue is declining. What's the story here? Second quarter. So it declined quite a bit. It dropped like in half. That's not good. EBITDA declined. It's been on a declining slope. These guys are reporting halves on this chart, and then second quarter here, which would be the first half. No, this is the first half 24. Okay, I was reading the chart incorrectly. Let me get back to it. So these are halves. This is a quarter. So it should look like half because it's half of this. Revenue is declining, not very steeply, but it's declining. The EBITDA is declining, and net income profitability is declining. So I would expect that dividend is going to decline. Right now, just the numbers based on how they calculate the yield is probably the reason why that dividend yield looks so darn high. Okay, so they're trying to go from hydrocarbons to more green, eco-friendly energy. And then they're exploring offshore, trying to find oil. I know Venezuela has a lot of oil. So if Venezuela has a lot of oil, maybe offshore there's a lot of oil as well. And Colombia has a border with Venezuela. Okay, so we know that their revenue is declining. They are doing a lot of units. Volumes are good. Volumes are going up. Now that you're seeing a better oil price, if they're increasing their volumes, this company is going to do better. So that looks good. Okay. So the stock price has not done well over 5 years. It's down 47%. That's probably part of the reason why the dividend yield is so high. The stock price continues to go down, which would make the dividend yield higher. And especially this past year, it's really sold off. With last month, it's doing okay. It's really had a nice rally for a week. And yeah, I'm still not really comfortable with this company. I think you got to dig deep into it and make sure you're completely understanding that these guys are going to start turning things around, and you're going to start seeing them increase their revenues. You're going to see them expanding kind of their value. Right now, things are pointing down, and I would not invest in it because there's just too many. There's too many red flags, and the alternatives. You got a lot of alternatives in oil and gas. The Brazilian company we looked at would look pretty good. And that one's a little more, it's cleaner, it's understandable. It's a bigger country, bigger land mass. You have oil companies kind of operating internationally since I'm in the US that I have access to. This one here could be a project for one of you guys that wants to look into it and really validate, okay, if you end up with a very comfortable or confident position that, hey, eco petrol is gonna do well over the next couple of years, it could be a big winner. I'm just seeing a lot of red flags, and I'm not in a position where I want to buy more oil companies very quickly. I have Chevron. It's a big position that is going to help me participate in this oil rally. But if you're looking for high return, high risk, here's an opportunity. You can look at this company, and if you end up really believing in it, might be a really good investment. I would just caution that so Colombia is not known as an oil country. They're trying to do something that is a little bit of a surprise to me. And offshore drilling is expensive. And I think the risk of you spending a lot of capital and money, pursuing, exploring for oil and not finding anything is pretty high. And when that happens, you lose a lot of money. So just be aware of that. I go into it eyes wide open and see if it's something that you want to get involved with. Within oil, you have a lot of choices. It's an industry that's been around for more than 100 years. You can play it safe with big major oil companies like Exxon. You can go a little riskier with companies like Oxy or Marathon, or you can go really high risk with like Ecopetrol and other companies that are smaller companies that are more long shots. Pick your risk level and do your homework. So those are the comments I'll provide, Shadow Guy. And if you want to go one-on-one on it, and maybe you can lead the analysis and I can take a look at it, I'd be happy to do that. So that's EC. All right, where do I go from here? Yeah, so Tomas, the oil companies, the one thing I would say is I probably have too much Chevron. It's good to have them, especially like today is a good example. Oftentimes you see like oil goes up, stock market sells off. So it's almost like oil companies are a hedge on the rest of the market. So that's good to have it there. But looking back, technology, communication services, really exciting companies in healthcare. I think if a person was investing in their 30s and is like, okay, I'm not going to need to touch the money for 20, 30 years. I think I would, you'd be better off looking at other sectors as the principal growth engine of your portfolio, like technology, or like within healthcare, you have biotech, some really exciting companies that are developing cures, like the whole weight loss thing, right? Huge growth, huge appreciation of wealth. Communication services, like you have companies obviously like Meta, just creating huge wealth. That's where a good portion of my capital continues to be. And I'm up there in age now. So looking back, if I was 30 years old, I would go big on growth. I would go big on quality growth. I would go big on that type of story, because you're going to double your money much faster. And the more times you double your money, the bigger pile of resources you're going to have when you decide to retire. Hey, cool, I'm going to retire. I got millions. Cool. Got plenty of money to pay for everything. I get to have some fun and so forth. But, so that's my comment there. And on the member folder that I shared, I put a retirement model out there, and I took out all my data, but that's actually a retirement model that I use. And you can take a look at it. It's a very model based one, and retirement models come in different flavors, right? There's simple ones where they don't give you much data. You just put in your information and it tells you, oh, you have enough money and you can spend this amount of money. It's kind of a black box. Or you can do it the way I like to do it, which is I like looking at everything. And that's what my model has. All right. So till the end, good to see you. And man, I've got such a long list of stock symbols. I'm going to note that, but I don't know if I'm going to get to NNE, but I'll give it a try. All right. So we went over EC. And let me get into a couple of others that I wanted to cover. So let's talk about Pfizer. Pfizer had news that an activist investor has entered the picture, and stockholders really like that. I think there's a lot of value here. I've said it, and man, if they could just get on a winning streak, these guys are going to be worth a lot more. Well, it's having a good day. Glad to see that, because the stock hasn't really done anything for the last year. I happen to believe that there's a lot of value in Pfizer. If it can get on a winning streak and start doing well and it's managed well, I think it's going to really, double in value very quickly, maybe over the course of 2 or 3 years. So that's how optimistic I am. If it can just get well managed, I think their CEO is good. But I think having an activist investor involved is a good idea, because he's just going to ask a lot of probing questions that is going to cause the management team to just rethink and maybe calibrate, maybe change their strategy a little bit for the better, and just kind of double check everything, and maybe, confirm that, hey, you're on the right path, keep going. And hopefully the stock continues to rally, because it's a solid stock. It pays a nice dividend, 5.66%. This stock was one of the most valuable stocks on the stock market 15 years ago, 20 years ago. That's a long time ago, but these guys have been around creating pharmaceuticals. They have the science infrastructure where they created a cure, a vaccine for COVID. They're just a really, really good company. They just need to get their act together with regards to the stock valuation and get into a mode of having that stock price appreciate. Meta did a beautiful kind of course correction with their stock. In 2022, the market hated the metaverse. Meta, we hate the metaverse. Stop talking about it. Don't do that anymore. So they stopped. And they're like, okay, we're going to double down on the main business. They launched Threads. Now they have their AI business, and the stock has flourished. Hopefully Pfizer takes the advice and maybe the activist investor comes with good ideas on, hey, focus here, focus there, and really becomes a positive impact on that company. So I'm optimistic about that. When I look at Pfizer, there's just so much darn value. I have it at discounted, and I've bought into Pfizer. I'm holding it. I don't know that I'm buying more shares because I think I own enough of it. But I see really good discounts around earnings per share, especially. They're going to be really profitable. And collectively, they're discounted by 32%. Their cash flows are lower than they've been historically. And I think if they can get back to what they used to historically generate as free cash flow, this company is going to double in value for me. And I really like the prospect of that. So good to have that active investor into Pfizer, kind of shaking things up, asking maybe some fresh questions, maybe some difficult questions that the management team needs to really think about. So, so that's what's going on with Pfizer, and that made the news today. On a down day, Pfizer is going up in value, which is good. The market's still down. Remember how I talked about the Russell? It was way in the green, but you got to give it a little bit of time to let it kind of sort itself out. Now it's down by 0.7. So not a terrible day. It's just a down day. Last week was a little bit of a the market was in a rut. It just seemed to sell off a little bit every day until we got to Friday. And then Friday was a boom day. Great. All right, cool. Maybe we're going to have another week like that where it's just a sluggish, like, all right, here we go again. We're down 0.25%. Oh, the next day we're down 0.3%. Oh, the next day. And that kind of sluggish is kind of like, man, this is getting old fast. Come on, market. Let's just get through October. And then we get into November, December, where we start seeing some really green days. We'll see. We'll see how it plays out. But that's what I'm feeling like is, a couple of the days last week were just so sluggish. They were kind of boring. All right. So Amazon is being sold off because one firm said, hey, we're going to downgrade Amazon. They're not as good as everybody thinks they are. So I will gladly buy shares today. I will buy Amazon shares. Thank you very much. One of the most valuable companies on the planet. I would put them top 3 most powerful companies on the planet when it comes to economy, right? Economics, influence on markets. They're just loaded with value. One thing we don't talk about a whole lot when we talk about Amazon is their video business, but they're going to come in with $3 billion run rate in advertising on Amazon Prime Video. That's literally $3 billion of margin. It's just like they have so many good businesses. Obviously, their e-commerce business, but then they have their cloud business, which is phenomenal. And now they have their video business is phenomenal. And I think that's going to be one area that's going to be a positive news when they do their earnings, which will be October 24th. That's going to be in 3 weeks or so. So we'll see how that goes. So Amazon is down. I think that's an opportunity. What about Apple? Let's take a look at Apple. What's going on, Apple? It's down a little bit, not too bad. I think what's going on with the iPhone sales? So the iPhone expectations are a little high. Yeah, so I think Apple is still so well supported, but it is down today. And I am bearish on Apple. I think the stock doesn't excite me. Their strategy doesn't excite me. I think they're vulnerable. I think their products, the iPhone could be not necessarily replaced, but it could see competition that would limit the growth of iPhone. And that competition is there. Huawei, we have different brands that are coming with really interesting devices. I own an iPhone, and when I refresh, I'm going to switch over probably to the Samsung Foldable. I think it's a super cool device. or I might even try the Pixel by Google. Um, and I was a Samsung user for a long time, and their devices, I felt at the time, the quality was the best. I owned a variety of phones, Samsung quality best. It was a very well thought out phone. Um, and then I switched over to iPhone because my family uses iPhone. So somehow we got into a family plan, and bam, I'm on iPhone. Big deal. I don't use my phone a whole lot. I use mostly my computer. And we'll see. We'll see when I refresh. I'd love to see that foldable in my hand, so that when I kick back on the couch and I'm watching Netflix with my wife, I've got double the screen size. So Apple is down. Apple is down. What are they doing over the last month? Not too bad. Just up 1%. It's been fairly flat. Okay. So we'll see how Apple operates. We'll see how it goes through the month of October. All right. So that is Apple. We talked about oil stocks quite well. And talked about Amazon. Let me talk about Vici. So Vici, all right. So Vici is 34 billion in market cap. Today it's down. Today it's down 0.15, which is pretty flat. Okay, so it's up 15%. This is a REIT. This is a real estate investment trust. They primarily do properties that you find in Las Vegas, like Caesar's Palace, MGM, Venetian, beautiful properties. And they also have properties around the US that are in smaller gaming sites, like the regional native land casinos and stuff like that. And I think they have one outside of Detroit. I think you cross the bridge into Canada and there's some gaming allowed there. I like a couple things about, where they play is I think the consumer's doing well. The consumer wants to go have some fun. They have jobs. They have money in their pocket. And they enjoy going to Las Vegas or regionally. And this is a solid company. They pay a nice dividend, 5.34%. When I look at the valuation of Vici, a couple things that I would point to. When we look at a REIT, there's a couple things that I want to focus in on. One is, can they afford to pay their dividend? So we're going to compare the dividend against funds from operations, and the earnings per share. Does it support the stock price? I don't look at free cash flows because it's not the right way to look at a real estate investment trust. A real estate investment trust, by rule, they have to distribute a high percentage of their funds from operations to keep their classification as a real estate investment trust. Real estate investment trusts historically do not appreciate a whole lot in stock price, but they tend to pay a high amount of dividend. So income investors really like real estate investment trusts. Okay. When we look at Vici, it's got a really nice growth rate. They've acquired casino properties. Those casino properties are doing well. The consumer's doing well. So when I look at this particular investment, I was discounting the investment by 10%, and I'm actually going to change it because interest rates have dropped. And Vici is a solid company, so I'm changing it to 9. My data is a little bit old, right? May. Let's update this guy. So my discount rate, there's two ways to think of discount rate. There's obviously weighted average cost of capital, which is what's the cost of capital for that company. That's a finance calculation. Cool. But I'm an investor. I will make the decision on what I want to use as a discount rate, because the discount rate is the rate of return that I want from this investment and how I feel about the company. So I just moved it from 10 to 9 because I had previously said I want a 10% rate of return from Vici. But now that interest rates are lower, I'm lowering my expectation to 9%. I think the company's not overly risky. I've looked at their financials. They're well capitalized. Their properties are very desirable, like the casinos they own, like Caesar's Palace and the Venetian. Those are just really desirable properties. Having said that, so I'm changing it to 9. Their dividend, if my data is still correct, is $1.66. Let's take a peek at that. So it's $1.73. Man, my data is behind the times. Whew. Glad I'm looking at Vici and updating my analysis. So $1.73. So the funds from operations that I had was $2.22. I don't know if you guys could see that. I know it's kind of hard, but I'll just read it to you. $2.22 were the funds from operations that I had in the month of May. And you can see that this dividend rate represents 78% of funds from operations. So they can afford the dividend, and they have to pay a high percentage of that funds from operations. When you compare a dividend stock that is a normal one, like we talked about Pfizer or maybe J&J, we've talked about J&J a few times over the last week. J&J will have a payout ratio, I don't know, 30%, maybe 35%. And that's because that's just a normal company. And that would be a normal payout rate. Investors would be comfortable that, hey, they can more than afford that. Now, J&J's revenue shouldn't fluctuate that much, but that's acceptable in that space. When it comes to real estate investment trust, by rule, they have to distribute a high amount of their funds from operations. So it's not, you shouldn't interpret 78% as, whoa, they're paying a much higher rate of their net income when I compare it to J&J. You're comparing apples and oranges. Apples are normal companies like J&J. Yeah, if they're paying out 30% of their net income, that's a really healthy amount. I wouldn't worry about that dividend ever going away. With a REIT, we're up there near 80%. That's normal. So very normal. I would be concerned if it was like 110, 120, 130. The growth that I expect from Vici is 5%. And I determined that the value per share based on their dividend rate is $43. That increased from my previous amount because I changed the discount rate and I changed the dividend amount. So this is looking good. So the dividend is worth 33% more than what the current stock price is all about. Now let's take a look at earnings per share. Earnings per share, I treat just like I would be treating Johnson & Johnson or Pfizer. It's the same way. Now, 10 analysts cover Vici, and they say it's discounted by 3.5%. Some analysts think it's going to go up to 37, some as low as 30. But you see that REITs, they don't appreciate or depreciate very much. So the analysts are kind of around the same zone. It's not like one analyst says 100, another one says 5. That's not the case. Some stocks you will see some really high analysts and so forth. When we look at 2025's number, because we're so late in 24 that I'm going to look at 25, it's $2.78. It's expected that earnings per share is going to grow very modestly. Okay. It's growing at 4% this year and then 2.65 next year. So $2.78. Wow, that really jumped up. And then the growth rate, I'm going to tone that down to 2%. So this is looking good. For a REIT, I'm looking at a 28% discount. It's going to pay more than 5% dividend. And this is why I've owned Vici in the past. Nice rate of return. If you combine that with 15%, you have a combined 20% rate of return. Sign me up. Now, would I get into Vici? Potentially? This might be a good move. I think that Vici is going to do well in 2025. Just looking qualitatively, the economy is going to be good. The consumer's doing well. So that's Vici. And the valuation is here. I did a video in May, if you guys are interested in watching it. But that's Vici. And do I expect Vici is going to double in value over the next 5 years? I think that'd be overly optimistic. I think that if you achieved a collectively 50% rate of return on Vici over the next 5 years, that's reasonable, maybe 60%. That's very reasonable. But the expectation on Vici is it's going to generate that income, which is very desirable to income investors. And it is a good business. It's a solid business. So over the 5 year, what did we do there? So 5 years, see 40%. So if you add the 5% a year, right, over 5 years and you compound it, you're really adding 30%, not 25, right? Because you compound. So you're adding about 30%. So you if you held Vici for 5 years, you'd be at like 70% return. That's pretty good. It's pretty good. That's what, 14% annually? It's not bad. That's pretty good from a REIT. So that is Vici. And it's a little bit of mystery why real estate companies have not been appreciating and they have actually been sold off. But I could tell you, if the market keeps selling them off and keep making them more attractive, and like Vici got to 6% dividend yield and they were selling off, it's like, okay, I can't ignore that. That's too good of an opportunity. Like here, Vici not too long ago was trading at $27. And you could have just seen a nice 20% rate of return quickly, and you'd be collecting that dividend. Whew, that'd be awesome. So, hey, market, if you want to sell off Vici, it is on my watch list, and you sell it off, I'm going to get more interested in buying it. Even though I don't want to buy more REITs, it's going to be too good to resist, and I'll probably buy into it. All right, so that's Vici. Checking that off. All right, so let me take a look at FLCH. So the China trade continues to flourish. It continues to rock and roll. The music continues to play in the China trade today. This is a ETF that trades in China stocks and top 10 holdings: Tencent, Alibaba, Meituan, Pinduoduo, China Construction Bank. The reason I picked this one as an investment that I wanted to get into is it got into industries that I like. Like, I don't know how to look at a commercial bank, but man, commercial banks are probably going to do quite well with the government so behind them right now. So I like that mix, and I like the mix of some of the companies that I am very familiar, like Tencent's kind of like a Google Alphabet-like company, kind of a Meta-like company. We know Alibaba's like Amazon. Pinduoduo is like, I forgot. And then, of course, we know banks. JD, I did a video on. I really like JD. So I continue to buy into this puppy. I'm probably going to buy more. I'm just dollar cost averaging into China. It is my big move going into 2025. I have a few stocks that are in China. I have Alibaba as my biggest position. And I'm going to add to Alibaba. I'm going to add to NetEase. I'm going to add to Baidu. These are just positions that just started, so I don't have a whole lot. And I'm going to add to, these are the 4 positions in China, and I'm going to add to this ETF. The ETF is kind of automatic, just $1,000 a day, $1,000 a day, $1,000 a day. These, I'm a little more, I kind of look at what's Baidu doing today. So it's up. I'm probably still going to buy maybe $500 in shares. Baidu and NetEase, I don't have a whole lot, so I'd like to buy into it. I'm going to need to dollar cost average into a rising market. NetEase is selling off. Beautiful. Maybe I'll buy $1,000 in NetEase. Yeah, it looks like it's selling off a bit. So I'm good. I'm good with NetEase selling off that way. So the China trade keeps working, and their market will open up tomorrow. I think there's going to be a big governmental report tomorrow. So we're going to get some fresh kind of comments and maybe some data, and we'll see what it does tomorrow. But I'm expecting that the market may be pretty excited about China again this week. So we'll see how it goes. All right, guys. So let me just say hello to everybody on the comments that maybe I haven't said hello to, and then I'm going to need to get going. I got to go do my trades and get my trading on. So Dade, thanks for joining. I'm sorry I can't cover Celsius today. I have covered it in previous live streams. I think if you watch the recorded live streams, you would see it. And Shadow Guy, thanks for asking about EC. That one's a little bit tricky. It's not easy to understand both the big picture and then the details. Alta, thanks for joining, man. Do Me Trash, once again. Looks like HIMS is taking off, huh? So HIMS had a sell-off, and now it's coming back. Wow, man, look at that. Holy smokes. Yeah, there's some story that they weren't going to be able to sell their weight loss drug, and looks like that story, the market doesn't care, or maybe this story was overplayed. Mike, Vinci's your biggest holding. Man, that's a good income stock. I like the company. Solid company. They really know what they're doing. And then Tomas, good to see you. And I do Chevron videos regularly, by the way, if you want to watch those. So I'm going to do a Chevron video when they announce. Chevron announces typically at the end of the month. Let's take a look. So November 1. They usually announce, what's interesting is they announce on the same day as Exxon. The two big oil companies announce on the same day. And it's usually, significant news, so to speak. So I like watching that earnings and then doing a video. It's up a little bit today, which is good. Now, Chevron is not rocking and rolling this year. It's not doing very well. Their dividend is good, but, collectively, the dividend and the appreciation, I'm down 3%. So not a very good stock for the year. For the year to date, not very good. For the month, it's doing good. So keep going up, Chevron, because you got a lot of upside to make up. All right, everybody. So I am going to stream tomorrow morning, and welcome you to join me tomorrow morning. I'm going to stream tomorrow afternoon or evening for some of you, and make some videos in between then. And each day this week, I will stream in the morning like I just did this morning, and then I'll stream in the evenings at 5:30 Eastern, Tuesday, Wednesday, Thursday. Join when you can. You are welcome to join, talk about stocks. And you're welcome to send me, messages on either this stream recording or however you'd like to. If you want to get on Discord, here's the Discord details. It's super active. You can get in there. Let me repeat. There's a lot of scammers on Discord. I know some of you know, but some of you may not know. Be very careful on Discord. I will not reach out to you and try to become your friend on Discord. I will not do that. Other scammers, or I should say scammers, will copy my profile, change their name just slightly, and try to fool you into believing that I am sending you out a friend request and want to connect with you. Be very, very leery of that. Be careful with that. But if you get into the Discord, you will realize that a lot of good conversations are happening. A lot of good discord is happening. A lot of good thoughts and actions are playing out on Discord. It keeps getting better. So thanks to everybody who's in there. And I encourage you to get on there. Just be very careful with those stinking scammers because they're after your money. They're trying to fool you. So be careful with that. I'm new on Twitch. And if you like Twitch, you can watch the same streams you're seeing on YouTube on Twitch. And I'm on Facebook, Threads, and X as well. Not a lot of action happens there. Most of the action is on Discord. So join Discord if you want throughout the day, see what's going on. A lot of the names you're seeing here are on the Discord, and it's pretty fun. It's pretty fun to get to know everybody and get to know what's their investing style, what are they up to, and I learn a ton, and I get good ideas out of it. So I encourage you to join in and get some value out of it. It's, investing is so fun, but it is a little bit of a solitary experience. 30 years, especially 30 years ago, you had few people to talk to. Now you got all kinds of people to talk to. You can get on Discord right now and talk to other people. We're kind of, interacting now, and it's the golden age of investing, man. So get involved, continue to learn, continue to get better, grow your wealth, become an awesome investor, and just establish economic freedom. Make more money than you can imagine. That's one thing that we were talking about a week ago is if I looked at where I thought I was going to land in the course of my investing, if I thought about it 30 years ago, I would have sold myself so short. If I would have thought about it 10 years ago, I would have sold myself short. So it's good to have goals and continue to get better and better and better. But I would also tell you is you could actually do a lot more. You could actually grow your wealth much higher. You could actually become a better investor than you probably think. You might be intimidated by, man, I got to look at a company and I got to get into it and understand it. Well, once you establish a skill and you become good at it, and you're really going to grow your wealth, you're going to grow your knowledge, and you're going to become better. You'll start, diversifying. You'll start having a portfolio. To me, it's like a portfolio that it works 24/7 for me. I sleep, my portfolio keeps working. I go on vacation, my portfolio keeps working. It keeps working, period. 365 days out of the year, it keeps working. So I would say that the upside to your investing over the long haul, it's almost limitless. It depends on how much time, energy, and how much you want to learn. But you can really, really grow, your net worth. Warren Buffett, I listen to everything he says, and he has a phrase. He says, if you don't figure out how to make money while you sleep, you will work for the rest of your life because you'll always be working to make ends meet. So the goal is to find investments that Vici, it's going to keep working. I don't have to go manage a hotel. I don't have to carry anybody's bags to their room. I don't have to serve any cocktails at the bar. Somebody else is. And I get to participate in the appreciation, and then they're going to send me a dividend. Chevron, I don't have to pump anybody's gas. I don't have to deliver any gas to any gas stations. I don't have to work on a oil platform extracting oil. But they send me a pretty good sized dividend quarterly because I own over $100,000 of Chevron, and it's pretty fun to get that dividend. It's $1,200, $1,400 at a time, which is a pretty nice chunk of change every 3 months. And of course, Meta's appreciated. If I look at the monthly appreciation rate, that stock appreciates probably about $5,000 to $6,000 a month. It's working at night. It's working its butt off at night for me. And I'm okay with that. I'll sleep like a baby, just be sleeping really nice, wake up, check my stocks. say, all right, stocks, you did your job. You work 24/7 for me, 365 days out of the year. So I would tell you, as a 56-year-old dude, if you're investing, whatever age you're in, if you become better and better at it and grow your knowledge, you're going to grow your wealth. That's a direct path of growing your wealth is knowledge and becoming better, avoiding unnecessary risks, avoiding big mistakes. You're going to make mistakes. You're going to have losers, no doubt about it. But if you have 7 out of 10 investments are winners, you're going to make a lot of money because you'll realize the losers. You'll get out of those positions. You'll move on. You'll know how to take better risks as a result. You'll learn a lesson. So all those things are the journey that you're taking. You want more out of that journey, become a community sponsor. We've got a pretty good group of people already in the member program. We meet once a week, soon to be twice a week. We're going to do a workshop on Saturdays and then have a video conference call on Sundays. And that's what I'm hoping is that collectively we're all going to get better out of those sessions, and you get access to that. If you're an advanced investor, you get to attend the in-person sessions. If you're a value investor, you get to participate in the live streams, nominate stocks to review. You want to be a super investor, I can give you more personal time. Also share my trades with you. I'll share my buy and sell list weekly with you, and I'll share my portfolio once a month with you. None of this is ever investing advice. I just want to share my data with you. Hopefully you find it interesting and useful. So awesome stream, everybody. This should be an awesome week. Let's take a look at the market one last time. Market's still down, but hopefully it rises at some point this week. So everybody, thanks for attending. I really appreciate you all. Have a good one. Take care.